integration of AgTech into the banking system, specifically focusing on role of AgTech in rural asset management and the related aspects. We are privileged to have a very eclectic panel, and I must point out we are very fortunate to have Mr. Setty, who's the MD at State Bank of India, responsible for retail and digital banking, as a keynote speaker. It's indeed heartening and really a good sign that the largest bank of the country has taken a very keen and aggressive interest in this space, and we hope to build on this presence and take it forward to much bigger heights. We are also very privileged to have partnership with CropIn, one of the lead AgTech players in the country, and that's been around for almost a decade, if not more. And of course, the lead agri bankers in the country. So without much further ado, may I request Mr. Setty to give his keynote address. Thank you.
Thank you, Mr. Raman. Thanks for actually having me on this, the panel. While we have been doing agri-financing for decades, I think State Bank of India was the pioneer in agri-financing. Post 1960s, the first ever commercial bank which had entered the agri-finance was State Bank of India. So what we have witnessed over the decades has been that the traditional lending models, what we have been adopting in the farm finance, I think they are not very effective now. There are two ways of looking at this agriculture lending. One is that you have the mandatory obligation of priority sector, which we've been doing all along. But much of this financing has gone into the crop loans. It has not gone into the investment credit. But wherever investment credit has been done by the commercial banks, unfortunately, has not been very successful. There are quite a few reasons. Of course, you can attribute to the political reasons of debt waivers and lack of information about the farmers, because most of the interaction between the farming community and the banks is episodal, occasional. They come to the bank for a crop loan. After that, neither the bank is following up with them, nor the farmer is interacting with the bank. Unlike, say, a home loan borrower, a retail customer, a personal salaried customer who has got an intense interaction and also leaves a credit history. The challenges in farm financing has been that one is you did not have the constant interaction with the borrower, number one. Number two, there has not been much credit history for the farmers to develop what is called lending models, pre-approved lending models, if I can say so. The third thing is that because of the series of debt waivers and the kind of lending which we have done only in the crop loan, many banks have not found it attractive to lend to the farmers or even farm value chain. The experiments which we have done in the value chain financing, either in warehouse receipts or horticulture or dairying, pisciculture, most of them have been on the fringes. There have not been any significant impact on all these activities. And in fact, most of the banks have lost money financing them, which they should not, because the value chains in agriculture are very well established and there are huge corporate linkages to the value chains. Despite that, I think there have not been great success in terms of quality lending to these sectors. So obviously today, there is a great amount of thinking, both in the government as well as the large banks like State Bank of India. How do I reach out to this very important segment of the society? And I'm sure that most of these farmers are also availing many services at various levels, may not be digitally, but we hardly have any information. How do we develop the new lending models to reach out to them? One is, how do I efficiently do my traditional crop loan business? And more importantly, that how I can transform myself to be a significant partner in value chain financing. I think these are some of the basic thoughts compelling many banks to look at the agri-fintechs. In fact, a few months back, when I took over as MD, Retail and Digital Banking at SBI, being an agriculture graduate myself, my interest has been kindled. I've been corporate banker for almost 30 years. And after 30 years, I was coming back to agriculture lending. And I thought, see, the potential for agri lending has not been properly utilized, even by a big bank like SBI, which has been a pioneer in farm lending. So when we looked at, we got in touch with Think Ag and asked them, what is the universe of this agri-fintechs in the country? We were surprised that around more than 1,000 agri-fintechs are operating in India. And 50 to 100 of them are quite mature in terms of engaging with the commercial banks. And some of them, like CropIn, obviously have been having a large-scale operations in India and across the world and providing services. So we are now embarking on a massive, major program in terms of engaging with agri-fintechs. I more than the fintechs, I'm looking for agri-techs, because finance anyway is our forte. And capital available to this segment, I don't think is in any shortage, because the biggest advantage lending to the sector is that you will meet the PSL obligation, priority sector loan obligations, and as you are growing your retail book and corporate book, of course, the requirement of PSL is tremendously increasing, and a direct intervention in farm lending as well as value chain lending would be one of the important activities which large banks like SBI would be undertaking. While we can devise models for digital lending, the problem in these small value loans is that the collection and the cost of collection for mainstream banks is very high. You all know. And wherever collection is not a problem, we were able to develop the digital deliveries very, very efficiently. For example, we have a mobile app, which is our flagship application. We have a Yono Krishi segment, and we have launched Yono Agri Gold Loan on Yono app, and where the prior approval and the appointment is given to the borrower, and pre-approved loans are offered to them. The only thing what they have to do is go to the branch and deposit their gold and take the loan. And this was one of the successful products what we have done. And in the last 1 year, we have given more than 29 lakh Agri Gold loans through Yono Krishi platform. Because it did not have an element of collection, because most of these are asset backed. I mean, gold is there, and people would not like to default on a gold loan. The collection mechanism was not an issue, so we were able to deliver this digital loan very efficiently. But what are we looking at is that even if you have a digital lending capability, the physical collection is an issue. Still, I think we need to have models where we need feet on street, where the beneficiaries can be identified and the collection can be ensured. So this is where I think most of the agri-techs whom I have spoken have established the models where they have the capabilities today. Through the AIML and unstructured data analytics, they are able to generate the qualitative inputs and leads on the beneficiaries, and also provide the last mile connectivity of collection from these beneficiaries. I think this is the model which we are definitely looking, and I'm glad to share that quite a few agri-techs are having these capabilities, and we will be working very, very strongly with them. Apart from that, of course, we are also developing our inherent capabilities of using the blockchain technology for farm lending. One of our successful launch would be what we call Safal, which is again a blockchain-based technology, where we are rolling out to a organic cotton farmer group, where the cotton is going to be procured by one of the Italian cloth manufacturers. They would be able to monitor, what inputs are being used by the farmers, and we would be providing the financing in this model. I think the potential for digital engagement in the farming community is tremendously opening up, and I think agri-techs, if they get it right, have a immense potential immense possibilities in terms of generating the business for themselves and to the banks. But what is that banks look for in agri-tech, and what are the models? Because see, there would be a lot of issues in terms of integration. Anything what agri-techs have to do with the bank, a mainstream bank, is that you need to have a suitable integrations. While much of the services which are available now, for instance, geo-satellite images, we have not looked at the integration. There is a portal, and the geo-satellite images, whichever farmer we ask, the images are made available through a portal, and we are downloading. But we have to move beyond that, and we need to establish the integrations with the agri-techs for a seamless availability of this data, seamless flow of the data, which many banks would be uncomfortable with. So if you stick only to the provision of services, that I have a software, I can get this information and provide to you, beyond that, you don't ask me, I think it's not going to work. People are looking for end-to-end solutions, and the models are varied. My view is that there could be 3 models which can be worked. A viable model says that if there is a agri-tech which is able to provide the last mile connectivity to the borrowers, we can engage them as a business correspondent. I think that is one model which can easily be rolled out. That you as an agri-tech can become a business correspondent of a bank, and by the sourcing applications as well as collection, you get paid. You have the technology to identify the beneficiaries. The beneficiaries' information is made available to the bank, and bank underwriting engine will underwrite the loan and make it available to him. And the collection mechanism will be done by the agri-techs. This is one model which is easily scalable in the business correspondent model. The second model, which is only providing the services, that is what we call business associate, without being a correspondent. That we will provide you the beneficiary details, and you do your analysis based on your data capturing and whatever structured, unstructured data which you can do. And based on the leads which are provided, you get compensated. And that business association can extend to the collection model. The third thing is, of course, essentially integrating your platform with mine, the Yono Krishi platform, and provide not only, except the financing, everything else is done by you. The identification of the beneficiaries, underwriting, and what we call a co-lending model. That but for that co-lending model to work, you need to be an NBFC. So these are the 3-4 models which we can definitely work on. Whichever is suitable to a particular model, and of course, software as a service or a service which is being provided, like geo-satellite images and all, can always be worked out. There could be several models which, depending on the agri-tech as well as what I'm looking for, can definitely be worked out. But what are the constraints which we are facing? One major constraint a bank like SBI faces is the scalability of agri-tech. Because when you are dealing with State Bank of India, it's huge numbers. Like, for example, when we rolled out our paperless Agri KCC review, our annual review on our Yono platform, in a day we do 2.5 lakh loans. I don't think anybody has the capability to handle 2.5 lakh loans in a day. So the agri-tech, when you is looking at the scalability, is a critical component. But we realize that I can't have a large-scale fintech agri-tech which is operating across the country. Very few of them. So what we have decided that we also don't mind going to a geography-based engagement with agri-techs. That means, if I'm operating in Andhra Pradesh, if there are 2-3 agri-techs in a particular area which are providing the services, we don't mind engaging them for the AP. So we are also reviewing our RFP models and onboarding models, that how do we ensure that a particular very good agri-tech operating in a particular area is not disqualified just because they are not pan-India. I think this is another model which we are working. We have been entrusted by the Government of India to devise the models which will be adopted by all the public sector banks. So we would soon be coming out with this RFP process to onboard the agri-techs. I'm sure this evolution of agri-techs will lead to revolution in the digitization of farming. But I would also request agri-techs and who are all logged in here that there is a need for developing the models which are suitable for the rural communities. I will give you one example. Today, I don't have any scorecard for a farmer. I have a scorecard for an MSME, scorecard for a retail borrower, but today I don't have any scorecard for the farmers. So whether based on your, the database and the modeling which you are doing, whether you can develop a scorecard model. I've been asking the rating agencies also to develop on that. Most of them, I think, credit information companies are currently working. For that, the lot of data which is not available in a structured manner has to be collected. And the second part is that the digitization of land records have happened. What we have been talking to the regulator RBI is that if the digitized records are available, today I am able to lend without security up to 1.6 lakh rupees. But if I am able to record my interest in the digitized records, I can take it up to 3 lakh rupees. That means, technically, my ability to lend to a farmer up to 3 lakh rupees on an unsecured, not creating a mortgage basis, goes up. So maybe agri-techs, when they're looking at models, I think they also have to take up with the regulatory agencies and the state governments and tell the state government that the banks are willing to give, why don't you allow the hypothecation or some interest recorded in the digitized records? Because my worry is that the farmer should not alienate the land. As long as he's having the ownership of the land, I don't mind continue to give the loans. The third part is that when there should not be any trust deficit. So whom you are engaging on the feet on street are very, very important. If I am engaging you for aquaculture, for instance, my ability to monitor the ponds, whether the ponds are there, the crop is there, or what is the population of that crop, is limited. So I would be solely depending on agri-tech to provide this information. But the credibility of the information is dependent on the quality of people you engage there. So please, my appeal to the agri-techs is that don't compromise on the feet on street. They are going to be the most important cogs in the wheel. Please spend some resources in developing the capacity there and the quality of manpower at the ground level. And that is going to distinguish you from other agri-techs, and in the long term, that is going to pay you. So, Raman, with these few words, I'll stop here. I'm sure that this will help further to the panel for taking this discussion forward. From a banker's point of view, I think the time is ripe to engage with agri-techs, but agri-techs have to prove their credibility, prove their scalability, prove the dependability. I think if these elements are taken care of, I'm sure that the ecosystem is quite ready to engage with agri-techs. Thanks for this opportunity.
Thank you very much, sir. Indeed, an excellent layout of the landscape and also the opportunity that exists. And you rightly pointed out the constraints in accessing that opportunity. I think there is no silver bullet. You're absolutely right. I think after the Green Revolution, we are all struggling how to make this happen in a sustainable manner. And thank you very much for the kind words about the partnership with ThinkAct. We are working in this direction, and we will support you and the entire team at SBI to take this forward and actually make it the lighthouse, as you rightly said, for the other public sector banks. I also feel that the other bankers on this panel will get a lot of fuel now to actually accelerate their so-called hidden plans, recognizing that SBI is at it and will be taking a leading role. So we look forward to action from the other bankers. And I would also point out that the AgTech players have a clear task cut out for themselves. It's not an easy road, but I think they all have been trudging. And I know Krishna has been at it for 10 years.
I think there seems to be some light at the end of the tunnel, and with the leadership shown by you and the rest of the team at SBI, I think there will be a huge gateway that will be opening up soon. So we at ThinkAg are absolutely clear, and we are committed to this journey. And we'll be partnering with you and everybody else who wants to come on this bandwagon. And we believe this is a way of supporting the smallholder farmer in this country, smallholder producer, the fisherwoman, you name it. I think this is just the beginning, and we see a huge prospect in this. Thank you again, sir, for your time. And if you have the opportunity, please stay back for some of the other deliberations.
Sure. I'll be there for some time, Mr. Raman, and till I get the call for the next meeting, I would like to.
Okay. Yeah. Thank you very much. Thank you. Thank you, sir. And with those words, I'd like to just hand over now to Jayesh. Jayesh is the Chief Revenue Officer at CropIn. He'll make a brief presentation on CropIn's platform. Over to you, Jayesh.
Thank you so much, Raman. And Mr. Setty, thank you so much for all your valuable insights. You have certainly set the context and the tone, not just for this webinar, but also in general on why it is important for us to bring in financial inclusiveness for the agriculture sector. So certainly appreciate that. And the other thing is, you rightly pointed it out, right? When you look at something as simple as a credit score, everyone who is on the call right now, from the attendees side, and hopefully most of my panelists as well, everyone has a credit score. But then when you think about this, we are all just urban folk who are contributing to a small percentage. The larger portion is in the rural area, and a large portion of that rural population is in the agriculture sector, and they of course do not have what is traditionally in the corporate world called as the credit score. So how do we overcome that challenge, and how do we work towards creating an agri-worthiness score, which is really an indicator of how amazing the farmer he or she is, and how credit lending should be done to him or her. What I'm trying to showcase over here is, if you look at, and this is by the way a no-brainer, right? Like if you go to any rural household, more than 50% of the income of a rural household today comes from agriculture. And this slide just personifies that if we are not able to provide support to the agriculture side in the rural household, then we are going to be staring at a very dark future from a future food security and a food safety standpoint. So it is very critical for us to acknowledge and understand that a large portion of the rural economy is driving the agriculture, and the vicious cycle of a farmer not having credit, and as a result of that not taking sufficient risk, and as a result of that we not getting everything that we want on our food plate, on our table, that will continue to exist unless we really bring in technology. And like Mr. Setty was saying, right, we are at a fabulous time where the inflection point or the collaboration point between the financial space, the technology space, and the agriculture space, all three of them coming together for the benefit of a very, very humble smallholder farmer in a country like India is extremely significant. And I don't know how many of you follow the economics of the country, but just last week it was published that agriculture has contributed almost 20% to the GDP of the country in the last financial year. And this has been one of the highest contributions in the recent times, right? So with all the undue disadvantages that have happened due to COVID, the one silver lining has been that agriculture has again come back to the foray because of our issues on food safety and food security. So this is a very, very prominent sector. And what I'm going to try and showcase in the next few slides is how the tech space, the ag-tech space can come in to work together with the financial and the fintech companies, especially the large lenders like SBI, to the benefit of the farmers, obviously keeping in mind the requirements that every enterprise or every bank will have. So if you look at this, the typical challenges that are faced by financial institutions are, the high cost of servicing, if a borrower is coming asking for 20, 30, 40,000 rupees, it's a small amount at a larger level, but for the farmer, it is a significant amount. And then for a bank, for them to just process that small amount is going to cost them a little bit of money to service that. Again, low ticket sizes, right? 20, 30, 40,000 rupees is not much in the grand scheme of things, but for the farmer, it is pretty significant. And of course, lack of reliable information. I mean, I think Mr. Setty said, I also started saying, with farmers do not have a credit score. So where are you going to get your reliable information from? So putting all of this together, how can we bring in credit to the farmers without causing any delay in the loan disbursement? And as a result of that, the farmer is getting credit at the right time for the right requirements and is able to disburse this on his plot of land. From a lending process standpoint, we believe there are 4 critical areas that AgTech companies can work with large lenders like SBI. From a loan origination standpoint, we are able to provide platforms that are able to do the entire digitization of the farm and the farmer, and hence become a KYC input across the system. Second is, of course, the underwriting and the credit assessment. So again, think of it for a second. If I am a farmer and I come to you to the bank to ask money for growing watermelon for $100, you as a bank, you are able to log into the AgriTech platform. You are able to check whether the farmer has grown anything historically. B, has the farmer really grown watermelon, and does he have the historical know-how to grow watermelon? And 3, has the yield been equivalent to say $200, $300, $400, right? If I want a loan for 100, then of course my yield has to be a little higher than the loan that I'm asking for. So through an AgTech platform, the banks are also able to go through the underwriting process in a very seamless manner. And then the third intervention that an AgTech provider is able to provide is on the whole loan monitoring side. Once I have lent money to a particular person, that person becomes an asset in my books. Can I monitor that asset through the entire growing season to ensure that has the farmer took loan from me to grow a particular crop, as part of this example was watermelon. Is he really growing watermelon? Yes, no. If he is growing watermelon, then how good the growth is. If the growth is not good enough, should I bring in some agri intervention to ensure that the package practices are being followed and the farmer, she or he, are able to get a better yield. And then, of course, the last element is the loan recovery. And again, Mr. Setty had mentioned, right, one of the biggest pain points that the industry today suffers is how do we recover the loan? So that's another area where we really believe that AgTech providers like CropIn have a big role to play. So there's a very clear line. There is a role that we can play pre-disbursement, and then there's a role that we can play post-disbursement. And those are a couple of things that I'll touch base upon in the next few minutes. From a loan origination standpoint, like I said, we are able to capture the whole digitization process and make it very, very seamless and easy for the bankers through a variety of technology and applications that AgTech companies have to offer. From an underwriting standpoint, as you can see from the screen, through the remote sensing world, so through the satellite imagery that we have access to, through the 2 trillion data sets that an AgTech company like CropIn has collected over the last 10 plus years in working with a multitude of farms and farmers, we are now able to train our AI and ML models to be able to detect what is growing at a pixel level. And the definition of a pixel for us is a 10 meter by 10 meter. And just so you know, a 1 acre farm approximately has 40 pixels, has 40 grids of 10 meter by 10 meter, right? So with that credible information and with the layering of AI and ML, we are able to detect historically what the farmer has grown and in the current season as well, what is it that he or she is growing, what is the stage of growth, how good is the yield likely to be, and when most likely will the yield take place. So these are again a variety of things that enable the underwriting team to have a view on the agri-worthiness score of the farmer and the farmland. And again, going back to the fundamental challenge, a farmer does not necessarily have a credit score. So agri-worthiness becomes the pseudo credit score which is very, very powerful for them to be able to go and take money for all the right reasons. Again, this is typically what an agri-worthiness report or a agri credit report would look like, where we are able to tell through the variety of seasons, Rabi, Kharif, what are the crops he has grown, what has the what is the water stress that has existed, what has been the relative growth index in his own or her farm, what is the crop family that the farmer has, and as a result of all of this, ultimately what has the yield been. And again, this becomes a great value proposition, because banks are now able to assess the risk of lending to a person on a very, very real-time basis with real factual information. So again, something very powerful for our farming community. When we were talking about the various phases, here we are talking about how we can do the loan monitoring and collection. Again, very critical, right? If you think about it for a second, a farmer is extremely leveraged in today's market. A farmer typically has taken money from 3 or 4 sources. So closer to the harvest time, how are we able to provide this valuable insight to the bank? So the bank is in constant touch with the farmer. And as a consequence of that, the moment the farmer is able to harvest and go to the mandi, or as part of the new farm laws, he doesn't have to go to mandi, right? So the moment the farmer is able to sell his produce, how do we ensure that the money is coming back to the bank, and then the whole credit cycle begins again? A, and then B, from the bank side itself, right? If I have lent money to 100 plots of land, and if out of those 100 plots of land, there are few plots of land that haven't done well, then I should not waste my time, energy, effort on those plots of land who haven't done well. Rather, I should focus on the plots of land that have done well. And this is a great insight that we are able to provide to the banks, wherein they're able to focus their monitoring and, more importantly, collection/recovery. This is a quick graphical view on how an AgTech is able to improvise the journey of someone who is coming for credit. It starts with the whole underwriting process at the bank. There are a variety of steps that are taken at an AgTech level, and then ultimately the farmer is able to get his credit on time. The other thing that we are also very, very good at doing from an AgTech space standpoint is, not only are we able to do it at a farm and a farmer level, but we are also able to do it at a regional level. So a lot of times when the banks, right, both the incumbents as well as the new age banks, when they are looking at determining which area should we set up our banks, so we are able to bring the maximum impact. And different banks have different philosophies. It could be either creating more impact because it is underserved, or creating more impact because that's where the maximum profitability is. So we are able to bring that insight from an agriculture standpoint and tell you at a cluster level, and the cluster could be a bunch of villages or pin codes, where what is happening, and basis that the banks are able to decide how their rural expansion should take place. And again, this is very critical, right? Because if rural expansion does not happen, the credit system will never reach the household of a bank. And if the credit system does not reach the household of a bank, the financial inclusiveness will not happen. So again, this is a very, very critical insight that, that the new age agri-tech companies are able to provide. Again, this just talks about a similar thing at a zip code level or a pin code level. And again, this slide is only trying to personify how the entire technology in the agri and the fintech space is able to better improve the efficiency of the system, right? So, if we bring in agtech and if we bring in fintech and we bring both these together, we believe that the processing time itself can be improved 50x, the efficiency can be improved 50x, the cost can be reduced, and as a result of all of this, the collection can be improved 30x, thus resulting in a reduction in NPA. So again, very, very strong proposition for the large enterprises slash lenders to get into this space, continue being in this space, and supporting the farming community. Agri-tech players have a big role to play in this. In terms of all the farmers that exist on an agri-tech platform, they are extremely and highly certified because of the variety of enterprises that these farmers are a part of, and hence should become an obvious a lending prospect, and money should definitely reach to them because a lot of visibility is already available to them. And that's one area that an organization like CropIn, we can definitely bring in a lot of value to the bankers and creditors when we work with them. Some of the use cases in terms of enabling the whole lending process for smallholder farmers, there are a variety of propositions that we work with. We are also beginning to work with SBI. So hopefully next time I speak to you all, we will have SBI as the forefront in our presentation here. But until then, we work very closely with the palm oil farming community in Indonesia with Nordic Microfinance for almost 25,000 smallholders. With HDFC Bank, we are working almost across multiple states in the country, where we are able to do crop detection for them, the agri lending for them, and then of course monitoring for them. Similar case with Kotak Bank as well. And with Rabo Bank, we are working with 10,000 farmers in Gujarat for mango is the season, right? So for their mango growing capabilities on how are we able to digitize that entire journey of a farmer, and then B, bring the credit to them. So these are some of the use cases. We are obviously working with a lot of use cases, but these are some of the critical use cases that we are working with the farming community in the country. And this is something that I have to talk about, in terms of the impact. And this is something that we take great pride in, right, at CropIn. Over the last 10 plus years, we've worked with 4 million farmers across 13 million acres in almost 50 plus countries, right? And as a result of this, we have collected crop signatures across almost 400 crops, across almost 10,000 varieties, servicing almost 200 plus programs and clients. Now, this becomes a very, very significant training bed for us to train our AI and ML models, which are then used and then leveraged by the credit companies, by the credit risk companies as well, to determine who the money should be lent to, how the money should be lent to, when the money should be lent to. And as a consequence of all of that, we really believe that there is a big revolution that we can bring in. And again, on the slide, you will see some of, we are present now globally in 4 different cities. And these are some of the marquee clients, both in the finance and the non-finance side that we work with. Thank you so much for listening to me. I will now hand it over back to Raman and or Hemendra. Very insightful session coming up with the panel. Thank you so much for listening to me, and looking forward to some engaging conversations.
Thanks, Jayesh, for a very insightful presentation on the capabilities of CropIn and what can emerge on a platform that has got such phenomenal amount of data. So we now move on to the panel discussions. I hand over to my colleague Hemendra for introducing the panel and moderating it. I know we may be running a little extra on our time, but I do hope you will stick around and enjoy the conversations and contribute to the Q&A as well. Over to you, Hemendra. Thanks.
Thanks, Raman. So we'll get started with the panel discussion now, and I take this opportunity to welcome all the panelists. We have Prabhakaran S, who heads risk, agri and supply chain at RBL Bank. We have Taranbir Singh. He's the business head for rural banking at Yes Bank. Jayesh Modi, he's the head of inclusive banking at HSBC Bank. Raul Rebello, he heads rural lending and financial inclusion at Axis Bank. And last but not the least, our partners for this event, Krishna Kumar, who's the founder and CEO of CropIn. Okay, so let's get started. So let me just take 2 minutes in setting up the context. And of course, Mr. Setty has given a very good, insightful presentation already. Jayesh has spoken on what agri-tech solutions are already available for farmer financing and value chain financing. But of course, the question remains, why agri-fintech and why now? Clearly, in terms of size of opportunity, as we see the PSL lending, which is for the current financial year is almost 16.5 lakh crore, almost $200 billion worth of opportunity in PSL for agriculture. If you top it up with value chain financing, post-harvest financing, warehouse receipt financing, there are estimates that could be in the range of $50 to $100 billion of potential opportunity You add up ancillary industries like poultry, like dairy, then fisheries, sericulture, beekeeping. That could be another $50 to $100 billion opportunity. So we are talking of an opportunity which is somewhere in the range of $300 to $400 billion, waiting to be transformed and changed for good, right? Now, the big question, why now? And I think Mr. Setty said rightly that this can only happen with more digitization. And the kind of digitization that we have seen in last few years, is mind-boggling, not just in urban areas, but also in rural areas. My travel to villages, gives me a lot of confidence that the farmer is adopting digital tools much faster than most of us think. So I think that's a good news. And clearly, I think COVID times have also accelerated the penetration of some of these digital tools that we see in rural areas. And I'm sure with government's target of, sort of taking broadband to about 600,000 odd villages, improving 4G penetration, improving smartphone penetration, we are going to see a lot of changes in next few years. So that's clearly one big reason. And of course, we all know that only 30% of the farmers have access to institutional credit. Most of them end up borrowing from the informal sources, with the cost of capital is extremely high, ranging from 2 to 5% per month, which is really very, very difficult for any farmer to make money after paying that kind of interest. And not just for the farmer, even for the value chain. If you look at SMEs and small micro enterprises in the sector, they also pay somewhere between 14 to 18% rate on the working capital loan that they take. So I think clearly a lot of challenges to be solved in terms of excess of capital, in terms of cost of capital. So I think that's the thesis for Agri FinTech, and I believe we have a lot of opportunities now. Fortunately, the agri-tech ecosystem is maturing. We have 1,000 plus agri-tech startups, and I believe most of them will converge to financing. Even if you're into output side or in the input side or on the data side or the advisory side, the convergence will happen, and the data and financing will be the thread which will connect various components of agri-tech. So it's extremely critical and integral to agri-tech that we see in India. So with that thought, maybe let me bring in all the panelists. I think the question that I have for them, the first question is to all the bankers. What are the 2 or 3 key pain points that you see while lending to farmers and the value chain players? And where do you think Agri FinTech can play a meaningful role? Maybe we can start with Jayesh.
Yeah, Mindra, thanks for posting the first question to me. Though being a foreign bank, I will have a tough answer to give to you. What we believe is, and as I think Mr. Setty has mentioned, that the key challenge which we always see is getting the credit history, and and that's something which we have not seen, partly because the entire sector, the entire agri sector is largely on cash, and to get a credit history becomes a big challenge. So I think that's the first key thing which we always see as a struggle. The second thing which is, there is a risk perception, given that time and again the farm waivers and the loan waivers come to, and this is being one of the segment which always gets into this, for a bank to take or to decide something on this becomes a big challenge. And the third thing which I can say from our side is basically the reach. Given that we just have 26 branches, we have limited in cities. For us, this becomes one of the challenge. So these are the 2 or 3 basic things which we foresee that is a challenge. How can this be overcome, and what can the Agri FinTech can do? I think they can, large part of this on farm waiver, they cannot do anything because that's something which is largely on the government side. But getting the data collection and to be honest, we had started earlier to this journey where I think the data collection, once it's been done, okay, the mapping of the credit history will give some credentials to aid. Today we have discussed that if you want to build a scorecard or you have to build anything, I think that's one thing which can be of great help. And the second thing is on the reach side, that given that if there's a technology which is being developed and which can bridge the gap between the last mile connectivity between banks like us, and to that are the two things which I can foresee will be of a great help to bridge this. I think that's from my side.
Thanks, Jayesh. Clearly, I think we have an open challenge for all agri-tech startups to work on farmer credit scorecards. I think that's coming like a universal theme so far in this panel. Prabhakaran, can we get you in to the panel?
Hi, good afternoon, guys. Um, I think among the panelists, I'm the only person from the risk side. All of my co-panelists are from the business side. So I have a different perspective to look at when there is a business. So I've been judged, or I have to look at how my money is going to come back, or I'm lending it for the productive purpose. The 2-3 challenges which I have is, one is the track of cash flows. So when the farmer is selling, where it is going, whom is he selling, I don't have any clue. And the second big challenge is, when I go to a farmer of 10 acres, it is all based on the history of the farmer growing certain crops in this. Suppose if there is a small tweak, instead of banana, if he grows some other normal crop, if it is instead of agri land, if it is fertile land, it has become a dry land, everything changes. And the amount is decided today. I think most of the banks decide based on something called DLTC, or the bank worked assessment model. So I think we are not doing a need-based funding. We are doing it just to meet out. Farmer is asking, say, 10 lakhs. So today, if I have to look at a farmer, small farmer growing maybe 4-5 acres, it should not be like not more than 5-6 lakhs. But I think I see loans given as high as 10 lakhs, and my counterparts come and demand, saying that competitors giving, we should also give it. That's the big challenge for me. So how do I monitor this cash flows? Third, I think the universal phenomena, when I lend small farmer, there is always a threat in my mind. When there is a debt waiver, what happens to my farmer? So that is one segment which is getting impacted universally as and when these election dates are announced. So I think that is one area we need the techs to help us. I think Jitesh has spoken well about the crop mapping in terms of soil suitability, whether this crop can grow in certain areas. So if we have those kind of data, definitely I think it will help us. If I get a request for a region where there's no banana grown, or there's no grapes grown, I'll be straight away able to judge that this is something which is not possible. So this is our 2-3 areas. I hand it over to my panelists.
Thank you, Prabhakaran. No, clearly risk assessment, risk mitigation are very core to lending to agriculture, and I'm sure there are many tools. Maybe we can go back to Krishna and he can throw more light on it. Raul, can you come in? Your views?
Yeah, sure. Thanks, Hemendra. I hope I'm audible.
Yes, you are.
First and foremost, thanks for inviting me, and great as usual to connect with you and all the panelists here, friends. It's good that you put these sessions together. I've also seen the participant list and I see a lot of familiar faces there. So I think just by virtue of all of us getting together, there's a lot of positive energy, and hopefully we'll kind of get even policymakers to look at the direction that we look through. So before I go to the pain points, and I know very relevant points have been put out, as in what are stumbling blocks, I'll maybe just call out what I think is working right now in the agri value chain and from our perspective as a lender. So the agri value chain is large, right? You have various agri value chains and you have different legs of the value chain. So what I see is that by virtue of, first and foremost, so much of demand for agri loans as well as PSL, today, the agri value chain, specifically in the later legs, seem to be working well, especially when the farmer hands over to, say, a processor and processor to Arthia, etc. There, those legs seem to be having a lot more traction now. And from an Axis Bank point of view, we make certain choices, and the choices that we make here are a function of our competency and convenience. What are those agri value chains that we have developed a competency over the last few years? And I would look at the value chains of maybe dairy, cereals, cotton, rubber. These are certain value chains that we've realized that are smoother to operate in. The data sets are richer. You're able to create some scorecards around these lending in different legs of this value chain, and so we've developed a competency to lend here. Now, I did mention that it's easier to lend at certain later legs of the value chain, specifically with, say, farmer aggregators or processors and purchasers. And that's again because over a period of time, lenders like us and many other lenders have been able to develop credit models because the data sets are so much richer at the later stages, right? And the pain points are really for banks like us to go down the value chain and start financing at the real primary leg. And what are the challenges there? The challenges there are very specifically the lack of data sets, the lack of, even if you have created credit models, those credit models are definitely not working. And we had panelists speaking about the uncertainties of loan waivers, of natural calamities, etc., which play a big role in really not having banks get that that confidence to lend in this segment, just to go down. It's just that confidence element and the risk models don't today work to that much precision as the models work in the upper legs of the value chain. So yes, agtech companies definitely have a huge role to play in building that confidence for lenders to jump on the bandwagon and be much more aggressive.
And Raul, if I can ask, one is of course the access to data set, but also the cost of data set. Do you think, does that work right now with the kind of scale it has, or you think probably those costs are prohibitive for a bank to absorb?
See, it's all a function of whether you can price in those costs, right? Now, the very fact that and you said it, that only 30 to 40% of our farmers are in the formal, are being, rendered lending through formal channels. The rest of them are actually taking in credit at such exorbitant rates. So even the lending that we say do with partnership with a dairy fintech, we are able to price it in because there is a cost for delivery, there's a cost to collect those data sets. But the alternative price that those farmers who are taking cattle loans are so high that even if we lend at a 15-16%, it makes sense for those borrowers to borrow from a program like this, because many of these programs also involve the partners giving the bank some amount of a FLDG or a guarantee of sorts, and we like to work with partners at least in the initial stages who provide those kind of guarantees. So, to a long answer short, yes, there is an ability for us to price in that cost.
Yeah. Okay. No, that's good to hear. Thanks, Raul. Taran, can you come in?
Yeah, hi, Hemendra. Sorry, I'm going through rough weather, so you have to excuse me. I'll not be able to.
No, it's okay. Go ahead.
Yeah, I think listening to largest lender SBI, Mr. Setty, and then my colleagues in HSBC and Raul, whom I know for some time, I think the thing is that challenges are there, but I think post 95, 96 private banking coming into play, I think a lot has changed over the period of time. Banks like HDFC, ICICI, Axis, Yes, IndusInd, they have evolved the ecosystem fairly well. What traditional crop loan, which were seasonal in nature earlier, where you give money for a 6 month and then ask them to repay the full money along with interest, and only then the fresh limit will be given, has been now history. Thanks to NABARD's Kisan Credit Card Scheme, which came in 97, 98, and then over a period of 2003-04, it has evolved. Current shape and form, I agree to the risk management side also, our colleague from RBL, there is a degree of, banks over a period of last 3-4, at least large banks have evolved in terms of what needs to be lent to farmer. Most of us are now moving from a large ticket size loans to a retail ticket size loans, which is very good for small and marginal farmers. Also, like initiatives which are happening in Axis on dairy side, we are also engaging with a lot of initiatives at our level on the supply chain side, where dairy, poultry, pisciculture, nurseries, poly houses. We are actually tapping the complete supply chain, where the manufacturer of a poly house taking it to farmer's doorstep, and from farmer's doorstep, how we can build a supply chain where they can sell it to the buyers. Eventually, that's where some of the agri-tech companies, and it's connected to each other, which are helping us in terms of getting to the full supply chain. Some of the agri-techs which are working on the input supply side, which is providing infrastructure, equipments, and other inputs. For example, in a polyhouse side, like a poly sheets, those steel structures, and intermediaries who supply, arrange subsidies for farmers. And on the output side, there are agri-techs who are helping us connect farmers with the buyer side directly, which are institutional in nature. So I think agri-tech is playing a wonderful role in terms of managing both the pieces, connecting the dots for us, where we become a fulcrum of for both of them. On the retail lending side, I think we are currently working with at least 3 to 4 agri-techs. Some of them are helping us in terms of providing satellite solution from a origination to a monitoring side, which is helping us big time on the saving cost and also to monitor the portfolio really well. Some of them are helping us on the land revenue side, record side, which is whichever states where it is digital. We are taking their help to ensure that we are not lending to the ghost customers. There is a land revenue record, the village, and the land holding, along with a cropping pattern, is ensured from there. Satellite images ensure that we are lending to a piece of land against a piece of land which is cultivable, and current crops are grown, and it's good for harvest or season, how the season is performing. And also, for us, we believe that still for a market of about $300 to $400 billion, the room for agri-techs to come and play is huge, where even to start with on the input and then connecting the farmer with the output side is going to be the key for next level of growth, because these are needs than aspiration, because that's what as a banker I believe that bank will play a role of a fulcrum, and all these agri-techs in the ecosystem of agri supply chain, be it dealing with farmers or agri allied activities like dairy, poultry, and others. We will be connecting the dots. And I remember 3-4 years back, we used to conduct these seminars in Bombay by Yes Bank, where we used to connect agri-techs with the industry like ITC or Mahindra, Shubh or others. I think thanks to you, Hemendra, for connecting the dots for us. It's a great opportunity for us to actually work with agri-tech and look at some of the opportunity which we can actually converge with our existing ecosystem and processes.
No, thanks, Taran. Of course, it's all about connecting the dots, and I think banks have a huge role to play. Unless they adopt, I don't think agri-tech will grow. So I think the kind of openness and flexibility that we are witnessing now, I think it's unprecedented. And I hope that cooperation continues for some of these models to scale. So I think with that, probably I can go to Krishna now. Krishna, I think a lot of bankers have talked about the challenges as well in terms of engaging with agri-techs. Mr. Setty said that there are some most of them are geography specific, and the scale is not there right now. Of course, and I think most of the agtechs are in the evolution phase. So what the role that you see for agtechs, or maybe for CropIn in specific, in sort of handling the challenges which bankers have talked about? And if you can also lay some light on the potential for digitization, which can possibly scale a lot of these solution and sort of solve the challenges which bankers are facing today.
Yeah, sure. Thanks, Hemendra. And I was hearing all the panelists and got a lot of insight as well as a problem. So let me start, Hamindra, with my experience when we as a CropIn thought of making this agriculture more data driven. So we started in 2010. I think globally we were the first agtech company, and that the term agtech was not coined that point of time. So we were the first company who started thinking of a data driven, bringing data to agriculture. And we looked around. We looked around Europe, US, and we didn't see any of the companies who are coming forward to solve this problem statement. We saw the rise of agtech companies after 2012, 14, when in the US some of the startup came up, and then in Europe some of the startup came up. But we take pride that no, we brought this whole concept of data. When we were started working with the initial days with the enterprise client, some of the question we used to get, we don't have a smartphones. The 2G connectivity is not there. Or we have to buy the smartphone for our field managers who are working with the farmers, right? How much is going to cost in terms of GB, right? So because 1 GB was somewhere around 200 or 250 rupees that point of time, and they used to calculate number of GBs, right? And that was the problem we were facing when we were trying to bring this cutting edge technology that point of time. The telecom penetrations were not there. 2G was not available in all the villages. People have not seen and interacted with the smartphone. So when the field officer, we bought around 50 phones, CropIn bought from their pocket, and we built the customer. We went to their site and we started training those guys that this is how you can do the digitization of your farmers and farm relationship. They were reluctant to touch the screen because they thought it will break. And we are talking about that 2010 era. So those were the challenges. But when we started, working with many of such clients, one of the things which became very evident that data digitization for the illuminating this dark data, which this was just talking about, right, is not only important for ag enterprises, but it's also going to be important as a whole as a country and also for the banking. And why do I say so? You can give a best of the best advice to the farmer, but if he doesn't have a capital to invest in that point of time, that whole advice is waste. So let's say you're saying, I see a problem, a growth problem in your farm, and you should put a growth enhancer, and that's going to cost you 5,000 rupees. And that guy doesn't have that capital that week, and maybe he can borrow next week, but then the impact has already happened on the farm, right? So the flow of capital was important, the working capital in the hand of the farmer, so that he can experiment, he can utilize all the advices, and he can make sure that his farm doesn't fail. So when I was reading the World Bank report, most of the farmers who took life because of the crop failure, and they were not able to pay back the money to the money lenders who have taken from, and that cycle keep continuing, right, from one season to other season, and we started thinking, after 3 to 4 years of inception, that how can we use this data to make sure that the flow of capital can also happen. And we were novice. We didn't know how the banking system works, but we knew that if you can bring out the risk and bring down the cost of servicing, these are two things we were looking at that point of time. If you can bring down the cost of servicing, and you can eliminate the risk associated with that farmland, probably that would be a magical point for the banks to think this like a business, not like a priority sector, right? So where you are lending, what is the risk? And there are other nuances, right? The government is coming in, loan waivers schemes and other stuff. So those were the other challenges. But my triggering point that point of time was, if the Airtel recharge of 5 rupees can be profitable in the villages, right? Why can't a 1K $1,000 loan or 50,000 or 10,000 rupees loan can't be profitable, right? Can we intervene with the technology? And I was a powerful believer of these tweaks and the innovation and disruption we can bring with this. And we said, since we are the first mover and we have got trillions of data sets, let's invest in the AI and data and build a product which will allow the capital to flow in this sector. Because if the capital doesn't flow, this sector is not going to improve. Because the more the capital in the hand of the farmer is going to, they're going to take more risk, more experiment, new crops, we did a project in Bihar, which was climate resilient agriculture, where the farmers changed their seeds because there was less water available and they can't grow the same variety of the seeds, right? But for that also they need money, right? So changing practices is going to cost them. So, and I know it's a very, very difficult task we took, and we said, okay, let's invest our major capital, which CropIn had little resources as a startup, towards this fintech product. And I'll not say that we have been successful, but we are working very, very hard to map every asset in the country and build a history on the top of it, that what happened on that asset in the last 3 years without even talking to the farmer. What is the current status of the asset? What is the forecasted harvest date for that particular asset? Whether the farmer has changed the crop or not. So I just heard, if the farmer changes from banana to some other crop, right, and it's a low value crop, then the whole risk goes up. So can you detect the changing pattern? So he took a loan for, let's say, cotton, and he's doing a paddy or some other crop which is a low worth crop. Can you detect that? Right. So can you highlight all the risk? What is the water stress? Does he has got all the right practices? Can you augment that information? And we started working on these bits and pieces. And trust me, there are around 50 models we have to build to make sure that all these things can be augmented on every 10 by 10 meter pixel. And I think we did a large scale processing. The question was also, Mr. Setty raised that the startup has to be ready for the scale, and we knew that if today country is processing 70 million farmers, and as a CropIn, as a global company where we are in 52 countries, and I was looking at some of the global numbers, right? So if you look at the India, South Asia, China, there are 383 million smallholder farmers. Now only 200 million farmers have got access to the credit. What happens to the 187 million farmers, right? And if you have to process every pixel in those countries where you have to provide that risk data, you have to build the compute power. And we build that. We process whole India in 4 days. Every pixel, we took around 18 states where the major agriculture activity happens, and we processed that pixel by pixel in 2019. And we said, oh, we are ready for the scale. Now, what we are waiting for is some kind of a sign up. And then the moment we get that working relationship, we can process state, district pin codes and augment that information. And we have started doing that with some of our relationship. So I think scale will come. I think it's a both way, right? So, one side the enterprise has to move forward and the startup has to move forward, and both will meet, and the scale will be outcome of that. The moment it's always a Cas69 problem. I remember my first, I used to work with the OmniActive long back, and it was 2011. And they were my largest client. They were paying 5-figure to us. And we didn't have money to actually run the operations. So I was sitting in their headquarters. I asked the CEO, can you give me advance on this on the bill? And he said, it's not possible, Krishna. I said, I want to meet Mr. Mariwala. So he said, fine. So I went there. I said, sir, I'm going to give you a best of the best service, but I don't have money to operate today. Can you give me 50% advance so that I can give you the best service which I have signed up for? And he happily signed up that, and we delivered that. And today, I think those are some of the relationships we built, that today we are in 52 countries, because there's no investor to fund that AgTech and to take that risk. There's no customer who's going to pay us. Then how do you run, right? But you have to build that trust, and you have to have the trust on the company which you are dealing with. But I think the trust will bring the scale. Today, CropIn is ready for the scale. I mean, we are processing 13 million acres, and we are augmenting all this information on 13 million acres. And we did it on 3.2 million square kilometer of India, right, in 4 days. So I think there are many startups who are small in the scale. I think we have to have that trust, build that trust, let them also opportunity to deliver, and I think it will work.
Thanks, Krishna. No, absolutely. I totally agree. I think the trust is critical, and that's not just in fintech, but for any AgTech solution. I think I always say it can't be a customer-vendor relationship to start with. In 6 months, in 1 year, probably it can go there, but to start with, it has to be more like a partnership model where there is some room for experimentation, because the day one you can't expect an AgTech to deliver. So thanks for those wise words, Krishna. Maybe I can go back to Jayesh, Raul, Prabhakaran, and Taranbir. If you look at the entire loan cycle, right from farmer onboarding to KYC to linking credit to inputs, to risk assessment, risk mitigation, all the way to loan recovery. What are the elements in the loan cycle which have the potential for onboarding AgTechs? Are there any low-hanging, if I can say so, in the whole loan cycle where AgTech can play a more important role? So that's my first question to you. Secondly, also on the value chains, I think Taran hinted towards pisciculture and poly houses. Are there any value chains? Raul talked about dairy. Are there any value chains which are where the readiness to adopt AgFin tech is higher? So I think these are two questions. For four of you, anyone can come in.
I think to say in value chain, I think a lot of us already working with dairy as a value chain, pisciculture as a value chain. I think these are all low-hanging fruits. If we can go to an anchor and follow the value chain model in terms of how much is poured by the farmer to the milk centers or the collection centers, and if we can evolve around a deliverable business model, that is, I think, which is a low-hanging fruit for AgTech companies. This can be, I think, replicated even in seed production companies. I think today a lot of companies AgTech companies are working with seed production companies. There is another scope. I think today the seed organizers are not getting the adequate input during the season, because that time I think these are all low-hanging fruits, because you are just following the value chain and just capturing the funds at the right time, right perspective, and you give funds only on a need basis. So this is low-hanging fruits. And I also feel that AgTech also help in two more areas. Today, I think if you look at the central government has announced a lot of schemes, agri infra up to 2 crore rupees for agri value chain. They've given separate scheme for poultry. There is a separate scheme for pisciculture. So I think they also can create some kind of awareness in the value chain. And third one, which I request, I don't know, is a low-hanging fruit or it is a long-term solution. So they are dealing with multiple regions, multiple countries. So they'll know a lot of best practices adopted by farmers or regions in terms of crop cultivation. I think they can work on this, and they can do extension services to the farming community through various seed companies, poultry companies, dairy companies, aquaculture like this. So I think these are all my thought on this.
No, that's right, Prabhakaran. I think seed production is one of those value chains which is closed loop. I think you rightly pointed out. I think dairy another one, because the milk collection is daily basis and you have much more liquidity than in a crop cycle where you end up looking at that bullet payments toward the end of the crop cycle. And I think another point which I think Krishna also hinted, the lending and advisory go together in this sector, and that's where I think AgTech becomes a little bit more important. It's not vanilla lending. You have to do a lot of advisory so that you get to a stage where you can recover the loan. So I think that's very integral part of the lending process. Any views, Jayesh, Raul, or Taran?
So, Heminder, what we have done is we have started our journey by, given that we have a good corporate relationship. So as Rahul mentioned and a couple of speakers, so the way we started is with our corporate relationship. First thing which we started is working on a value chain, which is post shipment, and slowly started developing a comfort on the various corporate supply chain programs which we did. So that was the first thing which we did, because for the first thing, being a foreign bank, was to get the awareness within the organization on how this entire piece needs to be get done. So A, the external world knowledge, but B, to make internal people aware of it, was the journey which we had to go through. The second phase, what we have now done is going towards the various models or various tie-ups through which either we can bring the pledge finance into the bank, we can bring the lower end of the corporate supply chain into the end. Third, tie up with various tech companies on not just going directly to the farmer, but to go to the one level above. So that's the second phase. And once we do this, once we bring the comfort, and given that the Reserve Bank has now come with various co-lending guidelines, see and do a tie-up where there is an expertise or a model which is available either with an NBFC to see how we can tie up and bring that expertise into this. So this is the journey which we are trying to do. Though earlier it was more like a priority sector force thing, but I think that does not work. You have to build models which you think that yes, it makes sense, and that's what the journey which we are going through, and that is really making sense rather than the forced credit which always was being there with the thought process.
Right, Jayesh. In fact, a lot of NBFCs are focusing on aggregation points rather than going directly to the farmers. I think that's one thing. And I think Raul also hinted at the later part of the value chain, where probably it's much more transparent and less riskier as compared to the upstream part of the value chain. Raul, your views?
Yeah, so very valid points by Prabhakaran and Jayesh. So the way I look at it is, and I'm just looking at it from talking to my peers and other private sector banks. I think all of us today are consuming these kind of solutions that Krishna offers in some form factor or the other, right? Where we kind of integrate these solutions is definitely in our business planning and in our whole element of budgeting, right? So for example, you would know that now RBI is looking, and they've divided the country into PSL deficient and PSL surplus locations. So there is a dire need for us to, start going into those deeper geographies and looking at them from a different lens. So where do solutions like these come up? And we've done it, in fact, for this year's budgeting. They throw up very clearly through the crop index, crop health index, crop yield index. They give you at a district level pinpoint, how do you rank order districts? Right. So why wouldn't one use this tool in your budgeting exercise? And I think everyone uses it there. Number two is in your specific underwriting. And here's our story. We've evaluated this tool for now 3 years. When our partners presented to us, it definitely looked at something which was a logical progression to undertake, because the metrics and the kind of credit tools that today we employ do not factor in a whole lot of those variables. But what we did was to be sure of using this at the underwriting stage. It required us to test these tools out. So we did test it on our existing customer base. And the good part was that these tools work, and we have reached a point wherein we think that we can on top of our existing credit models, plug in these tools also. So we are doing that, and very soon we would be using these tools for individual credit underwriting. I think some banks are already doing it. And finally, and I think Jitesh or Krishna alluded to this point, these tools are really efficient for timing collections, specifically, the kind of seasonality that is prevalent for agri collections. And if satellite imagery can tell you exactly how do you time your collections, it would be a great input. So we have not yet started, but we do think it's a logical progression for us to use these tools to time our collections. On which agri value chains, I think we've talked about this: dairy, the seed industry, definitely. So we have not really looked beyond these too much right now, but there are definitely the low-hanging fruits we see in dairy and seed processing.
Thanks, Raul. Taran, do you have any view?
I think most of it has been covered, but openness to actually experiment with agri techs and agri fintechs, because that's going to be future. Most of the ecosystem has resisted for a longer period of time, but I think the time has come, not only in India, but we have been approached by a few Israeli-based agtech companies and some of the Dutch-based companies. A lot is happening across the globe, both on quality and quantitative side. There is a huge opportunity for banks to actually play a role over here. And I think for us to actually starting point is start with a small a POC at a small geography, and then leverage that. And I buying the point from Mr. Shetty on the SB side, the scale is a mantra, but scale eventually will come once we start engaging with the agri-techs. We have to give them the platform to leverage what we have built, and then if it makes sense and we converge together, we can expand to geography. I think somewhere some of us has to play that role of actually bringing that scale to the agri-techs as well, as it was done by banks on the fintech side. Today fintech and NBFCs are leveraging banking system to grow and becoming a pan-India player, and I think similar role we need to play on the agri-tech side by leveraging what they are doing in a smaller geography and then expand from there.
Thanks, Taran. I think this is a very important point, and I think this brings me to the last question. I think the role of ecosystem, so one side we have regulators like RBI, we have NABARD, which is a very important player in the sector. And of course, on the policy side, I think all of you talked about loan waiver issues and how do we handle that. Then, of course, we have this whole agri-tech startup ecosystem. Then we have incubators and investors who are putting money into some of these startups, and then people like us at ThinkAg who are trying to promote AgTech innovations. What are those 2 or 3 things that we should be doing together? Are there areas where we can collaborate, prioritize? Is there an opportunity to create a sandbox? Raul talked about these tools. Is there a way the banks can come together and test out these tools, or is there a way banks can mentor these agri fintechs in some ways? I think it'll be good to hear from each one of you. How do we accelerate agri fintech adoption?
Ahmed, if I go first.
Yeah.
As you mentioned, say today, agri is the largest portion than MSMEs. Okay. We have a CGT MSC scheme for MSMEs. We do not have anything for agri. Can that be thought of? Why not? Okay. That's one. Second, yes, I think what you had mentioned, that currently we have seen a lot of models and a lot of innovation happening. But to be very honest, each one has a very small portion which is aware of. I don't think there's a platform or I can just give an example like in microfinance. Okay, microfinance, we have an SRO, we have an AgFin which gets knowledge getting to. Can similar sort of structure can be brought where we can through this platform we can try and do it through agri. I think that's the focus which we need to bring it together. That's what my view is.
Right, Jayesh. I can tell you on the credit guarantee, of course, that's one of the needs, and a lot of agri fintech struggle because a lot of banks ask for FLDG, and the number varies from 20% to 50%. But I can tell you there are some guarantee structure which are under works, which is going to be announced in the next few months. Hopefully, that will help the ecosystem in some ways. But definitely, we need more of that. Yeah, Krishna.
Yeah, I was thinking, I've been talking to IFCs and World Bank and Rabobank, and they really showed an interest that we are ready to take the partial risk. If somebody is ready to, if the banks are ready to go and lend to a value chain or a farmer, and if you can build this consortium and test it out on 10,000, 50,000 farmers with a consortium of banks, where these guys can take the initial risk of bringing the innovation, and that gives a platform for everybody to play a role and see how, and also to make this models more working on the ground, right? And so it's not at the cost of the bank only, but somebody players like these are taking some of the risk and pushing the innovation forward, and that becomes the basis to scale this up. I mean, that could be one idea.
No, absolutely, Krishna. I totally agree. I think there's a role for catalytic capital because the models are evolving, and all said and done, how much risk a bank can take. So I see a role for foundations and multilaterals and maybe even grant money to test out the solution and probably de-risk the models as much as we can. Raul, any idea from you?
Yeah. Talking about the ecosystem, I'll pick up two stakeholders. One is the regulator, definitely RBI, and one positive direction we see them moving. It's not yet announced, but at least we see them being accommodative. Is this whole moving away from the overhang of subsidies for working capital loans, right? So we have seen that happening over the last 8 years, and what that's led to is a whole distortion in agri credit. Everything is moved towards short-term working capital. And when you really want to finance, capital intensive, and that's what's the dire requirement right now, investment lending for capital enhancement. So we see the regulator moving that stance, and they're saying that they're going to move banks to have very specific term loan targets. I think that will augur well, and we will in turn be able to do more productive finance. Number two is the Agri Corporates, and I see a big shift happening here, and you would know this, Hemendra. A lot of the Agri Corporates, by virtue of their last mile connection, like the agri input dealers, etc., there's a lot of rich transaction that happens between the farmer and the agri input dealers, and a lot of data points which folks like us can consume and create models and scorecards around. So we've been grateful to be inducted into some of these corporate programs wherein they've given us the ability to tie up with their extended arms as BC networks, etc. And I think going forward, that could be a very interesting play, specifically since I mentioned it's all about converting those missing links and using that data into lending opportunities. So I believe, and I see agri corporates, the large ones, much more conducive in getting banks involved, introducing us to their stakeholders, allowing us to leverage their last mile distribution point. So for me, that's a big move, and I think that will augur well for lending to the last mile.
Right, Raul. I think that's a very good point. In fact, a lot of corporate players realize that for them to build relationship and stickiness with farmers, facilitating finance is becoming more and more core. And absolutely, I think since they're into transactional relationship, their ability to share data and enable institutional financing is far higher. So clearly, there's a role for corporates, and we at ThinkTech, or of course, have that agenda to build industry partnership, and we will definitely push on that. Prabhakaran, from your side, any last words?
I think. Sorry,
Taran, go ahead.
Thank you. So on the stakeholder side, I think NABARD, which has done a tremendous job in terms of actually bringing this working capital culture on the agri side, we expect them to actually engage more with the banking and the farming fraternity to bring more changes to the ecosystem, because finally it's such a huge country. Policy making is very important, and you can see the change which KCC and changes to it has bring to the table for most of the banking industry, be it in public and private sector space. I think second, a major stakeholder like all industry have their own bodies, which is like today microfinance is led by AgFin and MSME, and so there is a lot happening, while the largest employer in the country where highest population is living, I think that's where the body is a meaningful body is missing, which have a representation from FPOs, which has a representation from banking fraternity, agri-techs, and also the policy makers, so that all of them putting together, there has to be a fair representation, and there has to be a regular engagement with the government bodies, because that's where the right kind of policy which can bring the change much faster. Even today, one of the agri-tech we were talking about, they said we have to apply for license in each of the state and each of the districts to sell something. Look at if a company has to do that, follow the route. There are 731 districts. It's a pain. So some of those, and I'm sure government would not be largely aware about the issue. Otherwise, it would have not taken much time to resolve it. So something of that sort, where NABARD and a body will bring that change at the stakeholder level.
Absolutely. I think we also believe that we need facilitation between the government and the startups. And the fact that you mentioned, I think that probably applies to agri inputs. I think that's a nightmare for most agri-tech startups, because for each district they have to apply for a separate license, and it's never easy, and that kind of prohibits scale. I think some of the states have announced. I think Karnataka is moving, and there are a few other states who are probably going to announce, who are engaging with startups. I think MP is taking the lead, Odisha is engaging. So at least state level, we are seeing some momentum. But you are right, probably a larger body which can take these issues to the government is needed. Prabhakaran?
I have 2 points to add. One was, I think my colleague Raul has spoken about this last mile connectivity, which is a challenge for a lot of private sector banks like us. We have a limited reach. So we expect fintech can help us in terms of reaching out to the farmers or potential value chain. Second one is, I think the other area which is developing in agri field is FPOs. So I think that can be used as one of the opportunity, the input which is purchased by the members of this, putting those inputs through them or selling through them, so that we'll have at least can create some kind of scoring model over a period of time. So I think these two areas, apart from what my other co-panelists spoken.
Right, Prabhakaran. I think good you mentioned about FPOs. I think some of the NBFCs have gone the FPO route. Of course, we need many more FPOs. We need to create more depth there. I think both FPO ecosystem and startup ecosystem probably at a similar stage, nascent and evolving. But you're right. I think if you get to an FPO, our ability to serve multiple hundreds and thousands of farmers is far higher, and the transaction costs come down. I think we can go on for another half an hour, but I think we are already out of time. And I see some very good questions in the Q&A box and in the chat box, but I think we probably 10 minutes out of time already. So we have to stop here. All I want to say to all the panelists and all the participants that this is just the start of the series. We'll be doing multiple such events in next few months. The next one is scheduled for 28th April. That's also in partnership with CropIn. The focus there will be on agri insurance. And then we'll be picking some very specific areas like, which came out very strongly today, like credit scoring for farmers and risk assessment tools and ancillary value chains and industries, financing for them. So I'm sure we can definitely do half a dozen to a dozen workshop on this topic, picking up some very specific points. So please bear with us, and apologies for not taking the questions. We're really short of time. We'll probably plan a longer duration clinic next time. But I just want to thank all the panelists for some very wonderful insights. I know all of you are busy, but thanks for taking time out, and we'll definitely want to work with all of you to sort of build this engagement further between AgTech, AgFintechs, and the banks. I think that's the need of the hour. So thank you very much. And I also want to thank the CropIn team, Jyoti and Dhruv in particular, and my colleague Abhijit, who worked very hard in putting this conference together and stitching the various elements of it. So thanks to all of them. Raman, you have some last words? You may come in.
No, actually, I think it's been a very rich discussion, and I think I would just say that people should go back to the recording on YouTube and ThinkAg website and look at the key specific areas that Mr. Setty from SBI has pointed out. And I can tell you from a ThinkAg perspective, we are very excited about our work that we're doing with SBI, and they're going to open the floodgates in the next few months. So look up, listen to what he's saying. Of course, the bankers in the group know what is needed to be done. Once the big daddy in the room starts to act, I'm sure there'll be a lot more that will follow, and why not? And I think that's really where the opportunity lies. Maybe it's time to redo your tech strategy, look at your operating plan. But I can tell you the floodgates for AgTech FinTech integration, especially with the brick and mortar banks, are going to be open very soon. So there will be risks, there will be challenges, but no ship has sailed without being away from the port. So I think let's ride the journey and ride the waves, and let's take this forward.
Thanks, Raman, and thanks, Raul. Thanks, Prabhakaran, Krishna, Jayesh, Raul, everyone on the call, all the panelists, Jitesh. I think Mr. Setty has left. So thank you, everyone, and we look forward to host you again in next few weeks. Thank you very much. Bye-bye.
Thanks, everyone.
Bye.
Thanks.
Thank you for
Bye.
being there. Thanks.